You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. I get on here live every single day the market's open, 11 o'clock Eastern time. Go over the market, share some thoughts. Once in a while we'll even share our trade of the day. Today I got 4 topics to go over. The first thing, we have a crazy, fantastic lithium trade. We'll go over that. A great read in this past weekend's Barron's. The cover story was all about uranium. AI is gobbling up all the electricity. Is it time for uranium to shine? We'll go over that, and then we'll talk about gold, and then finally we'll hit on some oil. So let's go over to the slide deck. Excited about this one, guys. So the first thing that we're going to touch on, August 26th, we're sharing trades. Whenever we find a good trade, we'll share it with our advanced notice community. Here was our trade in ALB. Here's how we share trades. Hey guys, good afternoon. A new trade has hit our screen. We want to place a limit order to buy ALB 70 strike puts for $3 or better. This trade, guys, it's $300 of risk per contract. The cool thing about this trade is you can never lose $1 more than you're willing to bet. So if you just want to bet $300, $600, you can't lose any more than that. That's a really cool thing about buying options. Denny here shared this morning before I got on at 9:41. He's able to lock in profits on his ALB puts. He actually invested $169 per contract and just sold it for $708 per contract, 421% gain, or $1,630 in profit. So Denny, congrats, great trade, and congrats to all our ALB traders. So I took this from Barron's over the weekend. Barron's is a really just strong read over the weekend. Give you an overview of what's going on in the market. These 5 companies each have clear plans for the nuclear energy boom. Some of them are already thriving. So I thought it would be cool. Let's go over the 5 tickers that Barron's shared as these 5 companies each have clear plans for the energy boom. So CCJ. Ooh, before I get into that, whenever you're looking at uranium, whenever you're looking at a commodity, you want to know what the spot price is. So if you're trading uranium stocks, go and figure out what the spot price is for the uranium. What exactly uranium is trading at. You could do that tradingeconomics.com. I am not affiliated with this. My corporate partners are not affiliated with this in any way. But tradingeconomics.com allows you to get the price of commodities such as uranium. If I scroll down, here's uranium. Just make sure when you're looking at it, the date that the price is from. Make sure the date is fairly recent. September 9th, tradingeconomics.com. I think that site will really help some of you guys. Okay, let's go through each of the uranium names that Barron's shared. So we have CCJ, CEG, Duke, Oklo, and VST. CCJ is the largest North American uranium producer. CCJ, the way to trade these is look to buy them on pullbacks. If you've been watching Masters in Trading Live, this is just the expected move. When a name pulls back to the bottom side of its expected move, usually that's bullish. The top side is usually bearish. So that's CCJ. CEG, the owner of the most nuclear reactors in North America. This one as well, CEG, selling right back to its expected move. This might be a good entry point. You can see how CEG has acted around this point before. Duke Energy, a large utility, expects to build more nuclear reactors. Well, Duke has a different rhythm than CEG and CCJ. If we go back and look at the previous 2, you'll notice a lot of volatility this year, higher, lower, higher, lower. Not Duke. Duke, on the other hand, is trading straight up, and Duke is the only one of these so far that's on the top end of its expected range. Oklo. Oklo is the nuclear innovator backed by OpenAI Sam Altman. So Sam Altman is the ChatGPT guy. That's why there was a lot of interest about Oklo when it first came out, when it first was rallying like crazy. But since then, it's really gotten hit hard. Look at these expected moves. Notice they're getting smaller and smaller and smaller. That's the market pricing in less risk and less risk for Oklo. Finally, VST. VST is a name that we follow closely. I really like VST, a little bit speculative, but I do like how VST has been trading. It's a multi-state power producer that's expanding into nuclear energy. So here are the 5 uranium names that Barron's highlighted. Here's more uranium names that I added because some of the names that we look at closely, URA, LEU, here's Oklo, the 4Us, DNN. So these are all going to be uranium names. I also added their market caps. Something to note, Duke, the highest market cap, the lowest implied volatility. CEG, same thing, a high market cap, a relatively low implied volatility. URA is just uranium, that's why the implied vol is low, but LEU, these are smaller uranium companies. 4U's a smaller uranium company, 700 million, 600 million. That's why the implied volatilities are going to be considerably higher because they're considerably more speculative. Here's a name that we like to trade, CCJ. CCJ, so far in 2024, we've shared 3 different trades in CCJ in our various platforms. Why I wanted to share this is this chart shows CCJ since the beginning of the year. And if you take a step back and somebody showed you this chart and said, we've been bullish about CCJ all year, you would turn to them and say, great, you're probably doing pretty bad because CCJ has gone nowhere. But here's the cool thing about options, because when it comes to options, it's all about entry points. Entry points, entry points. So the first 2 trades that we made in CCJ, March 25th, March 20th, right here on these 2 circles. March 25th, March 20th, then we're able to take those off, 419 and 520. So the first trade, even though it wasn't a home run, we're still able to make 15%. The second trade, we're able to make 177%. Then we get out because it gets right here by some resistance. Well, as CCJ continues to trade, we find another good entry point. We get in September 40 calls for $1.93. Be a little bit patient. CCJ rallies. We take off 120%. So part of trading like this is you're looking for opportunities to get involved. No stock is just going straight up or straight down, but instead they trade in what we call a rhythm where you're looking for opportunities to get involved. Here's another trade that I want to highlight. This is a divergence trade, and this trade, we just took off the rest of this trade this morning. The trade is gold against platinum. And if you look at this chart down here, just look at the white and the blue lines. The white and the blue lines, we are looking for divergences, and when these divergences happen, we can find trades. And that's what happened right here. We're selling GDX and we're buying platinum. How this trade works, buying platinum, and then for GDX, we are buying puts in GDX. This trade started in July, right here, as this divergence started to present, and we're taking this trade off now. And we're able to take this trade off, locking in 120% on this trade, 100% on this trade. And this guy too, we're going to lock in about 35%. Our PLTM, we're going to end up covering these at about 920. So we're breaking even or making small amount. So the way that we do these divergences, you don't have to crush both sides of the trade. If we're trading platinum against GDX and the 2 platinum trades, we're able to break even. And the 3 GDX trades, we're able to make an average of 80% or 90%. Guys, that's a freaking really good trade. And that's why I was really excited to share it with you. GDX versus platinum. In our all access portion, we're going to be talking about oil. I'm going to stop right here. Telvin, if you could throw me back on. When we have volatility, like we have right now, what ends up happening is we see these divergences. Market makers can't value every stock perfectly. So volatility is what really presents opportunity. I'll see you guys back live 11 a.m. tomorrow. Let's head over to All Access.